strong performance, inconsistent dividends. Can this ETF really work for long-term income investors? Cue the classical music and let's find out. Welcome back everyone, I'm the Swedish dividend investor. So for today we will take a look at Amundi Stoxx Europe Select Dividend 30 ETF, ticker SELD. Remember, this is not financial advice, I'm just sharing my own investing journey and analysis. For more info, make sure to read the disclaimer in the description. The SELD seeks to track the Stoxx Europe Select Dividend 30 Index, the 30 highest dividend-paying European stocks from the Stoxx Europe 600 Index. Now, I don't remember having this in any of my videos, most likely because I don't have access to it through my broker. They are available on Nordnet for my Swedish and Nordic viewers. So, what do we have here? They launched this one in October of 2006. We have a total expense ratio of 0.3% and a fund size of 347 million euros. A noteworthy thing about this ETF: their distribution was semi-annual before, that's twice per year, but now it is annually, as in one time per year, and that being in December. Another thing, this is not domiciled in Ireland, but in Luxembourg, so check how the tax situation fits your goals. I also want to add, there is another similar ETF, almost the same name, except they use Euro instead of Europe in the name. The yield was a bit lower, but we will maybe take a look at that another time. Since they have a synthetical replication, we need to check their website for the holdings list. So, their top 10 holdings are the following: Aker BP, ABN AMRO Bank, Legal and General Group, Rio Tinto, Moller Maersk, NN Group, Orlen, Investec, HSBC Holdings, and Taylor Wimpey. Nice. They have their full list available for download as well, but we won't be spending the whole video going over every holding. So let's see their sector allocation. We got a huge 52% into financials, followed by consumer discretionary, utilities, energy, industrial, materials, and communication services. And for their country allocation, a big 26.9% into the UK, followed by the Netherlands, France, Germany, Denmark, Italy, Norway, Poland, Switzerland, and Spain. Good. Now, as always, we will compare it against some of the ETFs we have looked at previously. The S&P 500, VDIV, FEUI, and SPYW to see how they all stack up. First out is the 1-year performance. I'm actually surprised here. In the lead, we have SELD with its 42.9% return, followed by VDIV 22.89%, FEUI at 19.29%, SPYW at 17%, and the S&P 500 at 4%. This has to be a currency issue, since the S&P index is up well over 15% over the same time period. 5-year, we got VDIV in the top, followed by S&P, SELD, FEUI, and SPYW. But we also need to check the latest downturn, January 2022 until January 2023. We got VDIV in the top, followed by SELD, SPYW, S&P 500, and FEUI. And for the max time frame, we have the S&P 500 in the top, followed by VDIV, SELD, FEUI, and SPYW. Awesome. So it's a decent performer, even in a downturn, but nothing like VDIV, it seems. Let's talk about the dividend. But before we do that, make sure to like the video if you enjoy this type of dividend focus analysis. It really helps the channel grow. We do have data 10 years back. That's at least what I could find. Absolutely shocking.
I am shocked. Shocked. Well, not that shocked.
We do have some cuts. Nothing new here. They seem to raise the dividend, only to cut it in a year or 3. So if we invest in this, that's something we need to deal with. The total growth of the dividend is 18% in 10 years. That's not so appealing. We see their 3-year CAGR is at around 5.5%. Their 5-year CAGR of 11.8%, coming off from that COVID low level, and their 10-year CAGR is at 4.22%. So let's do a valuation. Like always, I've gone with a 10% discount rate for all cases. This is our required return. And why do we do valuations? So we don't overpay for an investment. Based on my growth assumptions and the different scenarios, the model will give me a price to pay for a potential 10% return if the cases plays out. The model goes on for 10 years. For normal case, I've gone with 4.5% growth. That's about the 10-year growth we saw from before. I've gone with a terminal multiple of 16. That's a multiplier for the discounted dividend. It represents the yield the market wants 10 years in the future. 100 divided by 16 is 6.25. So 6.25%. That's about where we are today when we're talking about the yield. We get a present value of 22.33 euros per share. For the best case, I've gone with 6% growth. I would say not very likely, but still, it could happen. Terminal multiple of 18, so a yield of 5.55% 10 years out. We get a present value of 26.5 euros. For the worst case, I've gone with a long-term growth of 1%. That's with growth and cuts of the dividend. A multiple of 12, so a yield of 8.33%. We land at a present value of 15.3 euros. We also do a mixed valuation, using a probability factor to weigh the different scenarios and how likely they are. I've gone with 70% for normal case, 20% for worst case, and 10% for the best case. We land at a fair price of 21.34 euros or 19.21 euros with a 10% margin of safety. So that's about where we are today. Now, what's my take on this? I don't know, guys. This one seems a bit all over the place. The dividend goes up and down. The performance is meh, and the yield isn't that high. I would say, if I would want high yield, I would go for something like ASWN, and if I want a stable growing dividend, I would go with VDIV. But that's just my take on it. Let me know what you think about this one. Do any of you hold it in your portfolio? And is there an ETF you want me to analyze next? Make sure to post it in the comment section down below. But guys, that's it for this one. Since it's a new year, I will be updating valuations on previously covered ETFs throughout the year. So make sure to subscribe and turn on notifications so you don't miss those updates. With that said, I'm the Swedish dividend investor, and I will see you in the next one. Until then, stay smart, stay patient, and keep stacking those dividends. Ha det gött!